Hi, and welcome everyone. Thank you for joining us today. My name is Olivia Fahey. I'm the product marketing lead here at Akoya, and I'll be hosting the session this afternoon. This is the third in a series of 3 in the program we've been hosting over the past couple months with our partners at Capgemini. This series has really been designed and is designed to help financial institutions of all sizes meet open banking regulatory requirements. We've teamed up with the experts at Capgemini to really go beyond a lot of the surface level discussions and equip banks and credit unions of all sizes with both the education and the resources that they need to make informed decisions and implement compliance both quickly and effectively. The conversation today will focus on the overall complexity of achieving compliance and the various functions across the organization needed to meet that compliance now and both in the future. We'll talk about the processes required to be put in place in order to manage countless third parties seeking covered data access. And we'll also talk about the policies and procedures required for an institution to both stay in compliance and meet compliance as regulations evolve. So before I introduce our 2 speakers here, just a few logistical items. We have a total of 45 minutes today, and we're saving about 10 to 15 minutes at the end for questions. You should see a Q&A at the bottom of your screen where you can submit questions. You can choose to enter your name or submit questions anonymously. Both are totally fine. And if we don't get to all the questions, we will include them in a follow-on email that goes out with the recording of the webinar afterwards. So without further ado, let me introduce the first of our 2 speakers. Today, we are here with Jeroen Holscher from Capgemini. Jeroen is an expert in transformation programs in the cards and payments domain. He's been with Capgemini for 24 years and helps clients improve their payment products and their underlying technology. Throughout his 24 years at Capgemini, Jeroen has specialized in both payment strategy, definition, sourcing decisions, back office transformations, PSD2, and market overviews. 24 years, Jeroen, that's impressive. Thanks for being here with us today.
Thank you.
And next, I just want to welcome Courtney Robinson, Head of Policy and Communications here at Akoya. Courtney came to Akoya from Block, where she served as the Head of Regulatory Affairs. Throughout her career, she has worked to coordinate policy outreach to the Consumer Financial Protection Bureau, the Federal Trade Commission, and relevant committees on Capitol Hill. She also serves on several advisory boards, including the District of Columbia Department of Insurance, Securities and Banking, Federal Reserve Bank of Atlanta, and the Association for Enterprise Opportunity. Courtney, I don't know how you even have time to be here, but we are very happy to have you as well.
Thank you, Olivia.
So before we actually dig into the conversation here today, we just have one quick poll. If you know our webinars, you know we love to run a poll here before we jump in. So we will put this up, we'll leave it up for about 20 seconds. And what we want to understand here is where you stand. We have a diverse group of organizations in the webinar today. We want to understand where you are in the spectrum of build, partner, outsource, or really just not sure yet at all as it pertains to meeting your 1033 compliance requirements. So we'll give you a few seconds to fill that in. And there is the not sure yet option if you choose that, but just help us gauge where you are so we can get a better understanding of the audience and just bring some of this information into the conversation today to help it pertain a little bit more specifically to you all. Okay, I think we can close it, and everyone should be able to see the results when we close it and put them up on the screen. All right. Okay, so we've got a little less than half, not sure yet. As you know, dates were pushed out with the first tranche needing to be compliant in April of 2026. Some have already made the decision to move forward with building their own solution. And then there's a mix of about 40%, 42% that are looking to partner or outsource. So across all dimensions there, and we'll keep that in mind. I don't know if Courtney, Jeroen, you have any kind of initial thoughts on how things sort of shook out here? Is it what you expected?
I think this is what I expected for the regulation to come in. So a mixed bag. And definitely I would say the session is timely because there's still a lot of people that are not sure yet. So hopefully they get some direction here.
Exactly. That's exactly what we're shooting for. Okay, so let's dive right in. I'm going to start with you, Jerome. First questions for you. As we've talked about in the past couple of sessions with our Capgemini experts, you're all very experienced in helping financial institutions across the globe really implement open banking solutions. Can you highlight just some of the key similarities and touch on some of the key differences between the final regulation here in the US and that of other geographies? And then more importantly, can you highlight why satisfying compliance requirements elsewhere doesn't by any means mean that you satisfied US requirements?
Of course. First of all, I think there are a lot of similarities between the regulations if you look at the core capabilities needed. So what we see across the globe, and not different for US, there is a need for an API gateway. There is a need for proper concept management and security. There is a need to integrate with the back office to be able to expose data and use the data. There is a need for reporting to the authorities and reporting about progress. And of course, there's a need for a developer portal to be able to onboard third parties. So far, I would say so good. You can leverage a lot and can learn a lot. However, looking at the US regulation itself, the API standards are specific to the US. So you have to take that into account. The second and most biggest difference I see is in the US, open banking is definitely a market-driven approach versus a regulatory-driven approach. And that becomes most obvious if you look at third-party onboarding, that due diligence and that qualification is completely pushed to the banks, where in most other markets, it is regulatory driven. So the regulator is also providing a competent authority to qualify third parties, which makes it in US a much bigger task related to third parties compared to other markets. Lastly, if you see what we've seen in other markets, the regulation is not static. So it will keep on moving and changing and updating. So April 26 is just the first, but I can promise you every year, every other year, there will be new updates. So, and what we've seen across the globe, some of those regulations are converging, which is helpful to leverage, but other parts are diverging. So in the end, if you want to create a US compliant solution, you need to look at it specifically. Yeah, you can learn from other experiences, but I think in the end, you will have a specific solution for US.
Yeah. Thanks, Joan. Courtney, and feel free. People don't want to only hear from me, but I do have a question for you next. You're obviously really familiar with policy in the regulatory space, and this open banking regulation in particular within the financial institution requires a wide swath of functions in order to function and actually coordinate on an ongoing basis. So can you just help us think through what are those major functions and what are like the roles and responsibilities and how can they actually work together to achieve continuous compliance within the financial institution?
Yeah, of course. I mean, I think it's not often that you see a completely new regulation being imposed upon financial institutions in this way. You know, of course, the regulatory regime is always there. The oversight and updates and iterative things that Jerome referenced are always there, but really to have a completely new interpretation of a law that is now being built into regulation that has to be implemented requires much more than trying to adapt to just a simple update. So there's policy, there's compliance, there's legal, there's product engineering. All of these teams have to coordinate. You know, from the policy or government relations side, just the initial look through of what's required and like the basis and reasoning for the regulation. Like, right, this is 1033 is is meant to empower consumers in their choice and their ability to port their data while also having safety around that and knowing that their data is secure. So knowing that that's the reason in going to implement something like 1033, there's a compliance team making sure that compliance is there initially, but also ongoing because, and as Jerome said, like there are requirements that you are able to continuously demonstrate that you are compliant with the 1033 regulation, and you have to be able to produce records that indicate such, and also that there is no sort of like undue potential blocking or not following the rule or following the spirit of the rule. Even the product and engineering teams come in again, coordinating on this. You're now putting something new in front of your customer. How do you make that experience work for them? Like, what does what they see look like, but what does the developer interface look like on the other side? How is that built? What does it look like? How do you tweak it and make it iterative so that way you can continue to not only be compliant with any changes that might come up, but also respond to how the regulation or like how you're working yourself and whether you're meeting the specifications that are outlined in the 1033 final rule. So it's beyond just that coordination. It's setting up a project team if that's how you work internally, doing this work, coordinating across all of these groups to even just do the initial evaluation of how this is going to work and how you'll make it work. But again, because the final rule requires continuous compliance and the ability to retain records that prove compliance, and because regulations also evolve, you have to be able to divert resources or at least keep resources and human capital focused on the rule compliance and making sure that everything continues as is required. So I know it's a lot on its face. It just seems like, okay, let's just get this done and put it out there. But having the experience of seeing other regulations implemented the same way, like it takes time.
Yeah, and to build on what you said, Courtney, I also describe it as actually building a complete new channel for the bank. And that's not what you do often. And to Courtney's point, is even a regulated channel. So it comes with the restrictions and the deadline and everything attached to it. But yeah, if you look, what was the last time a real new channel for a bank with new facilities has been created, it's probably the online, right? It's the internet time. So that's 20 years, more than 20 years ago. And everybody went through those cycles in learning and understanding that there's a market segmentation, there's capabilities behind, it is everything what Courtney said. So it is definitely a quite interesting development and quite challenging one to get across. So never underestimate this one, I would say.
Now, Courtney, I heard you say, you can set up a project team, but it's like that project team is going to be on this project long term. So this is an ongoing effort. It's not a one and done. And to Jerome's point, it may require setting up an entirely new channel. So Jerome, with this being an ongoing effort, banks can anticipate countless third parties knocking on their door to gain access to the covered data under 1033. Banks, in turn, in order to work with this, will have to have some pretty rigorous programs in place in order to vet, onboard, maintain agreements with all these third parties, every single one. And that is also a very ongoing, rigorous effort. So throughout your work globally and in this space, what are some of the more successful ways that you've seen this done, and anything you'd caution against?
Yeah, sure. So, I mean, the third-party topic is quite interesting in US because it is actually quite different than what we see in our other markets, what I shared already before. But let me walk you through a few of those dimensions. You look at the operating model in Europe, in UK, in Australia, there is a competent authority because it's regulatory driven. That is qualifying and doing the due diligence of all third parties. Those third parties get validated, they get a certificate, and that is then valid for everybody to use in the open banking area with all the banks in that jurisdiction. So the operating model in US is different because there's no central competent authority who's qualifying and doing the due diligence. That is pushed to all the banks. So if I then take the bank angle, this means basically for the bank an additional overhead because it is a compliance function that you have to create and maintain in terms of qualifying those third parties and certifying them and give them sort of certification, a technical certificate to connect with the bank later on. If I look then at the third parties itself, for them it will be quite hard because they have to be certified with every bank. There's no, right now, there is no central entity who say, okay, you can go as third party in US and get a certificate for the entire market. That is not there yet. So that becomes quite challenging for a third party if they want to have coverage around the entire US and all the banks. It's, I think, almost impossible, to be honest. The fourth is there will be a definition of what does good look like in that due diligence. If everybody's doing it on its own, which is right now the case, that can be also quite different. So what one bank will say, okay, I'm fine with it. Another will have a slight variance on it, etc., etc. So only if you have passed through all of that and you're still there and you still want to connect as a third party, then you go to the bank, I would say, developer portal and get through the process described. And even that will be different and will be not standardized, which is in essence fine. You can differentiate there. You can be more smart and more automated. But yeah, that's the last step. So for me, if I look at what does good look like and what is definitely a next step to take, is you have to come together in some way in US to streamline this and to make this operational viable, both for the banks and the third parties, and make it scalable. Because if I look at it right now, just in isolation, pushing this problem or this statement both to the third parties and the banks to solve, it will be way too complex and not scalable. So I think collaboration is needed here. And that would be my call for the market. There is still some time to go, but it has to be collaborated in a smarter way solved, that not everybody is on his own trying to solve this problem. Because what I've seen around the globe, this can be very complex and time consuming also in testing those third parties. So you better have the basics in order and standardized and more smart than what it is today.
Yeah, thanks, Jeroen. Last question here for you, Courtney, before we continue into the next kind of segment is, I think most people are familiar now. I don't know if everyone's read all 500 pages, but the final rule introduces a plethora of policies and procedures that a financial institution has to put in place and maintain in order to keep up with compliance standards. So can you help us understand just at a high level, what are some of those policies and procedures and what sort of effort is required to keep up with that?
Yeah, I mean, right. Again, this is for the benefit of the consumer. This rule was created and promulgated with the idea that the consumer should be first. So a lot of these things that you're going to see that are requirements are also they are managed services based. They are focused on being able to communicate with the consumer and the consumer being able to reach you, and then making sure that the regulator can check that you as an institution are actually doing that. So the final rule requires that the customer have access to data, but if they don't want a third party or another institution to have access to that data anymore, they have to immediately be able to revoke that permission. Data providers have to retain records that show what they've done in response to third-party requests for consumer information and access, and that has to be kept. That information has to be kept for a number of years. You have to keep that data, right, but not use it for any purpose that's not reasonably necessary or in line with what the consumer asked the data to be shared for. The information that you're sharing or the way that it is put out, you have to build this according to tech specs where data format is easily readable and standardized. You have to come up with internal policies and procedures around how and when you deny third-party access to data, because again, this goes back to safety and security. If there's an issue where a third party is believed to not not be working with these standards or possibly compromising the data that is being shared. You can deny, but that denial has to be reasonably necessary, and you have to be able to explain why you and again, the CFPB was very thorough. They said they also want to make sure that there is no evasion. So data providers and folks covered under this rule cannot take any action to intentionally evade the requirements of the rule. And so that all goes back to the data retention and requirements that are in that final rule. And then there's also a need to on an ongoing basis, I would say, keep up with what industry is doing and engage in not just keeping up with the regulator, but the overall space. I mean, again, there are all of these things that are in the regulation, but I can say from the point of view as someone who does policy and who has been on the other side of these things before, you have to keep track of things like updates to the regulation, any bulletins that the Consumer Financial Protection Bureau might put out, the evolution of any sort of related regulations, like the 1033 doesn't just stand on its own, it cross-references other existing regulations like the Graham-Leach-Bliley Act and rules with the FTC and other things that financial institutions have to be compliant with. So you have to keep your eye on all of these things, all of these moving parts, while also being able to prove that you are doing those things. And again, as Jerome was talking about, look, it's been a very long time since we've seen something like this come up, new that requires compliance. I would say the last thing I can even think of would be another Dodd-Frank era regulation around small business data reporting for financial institutions. And again, and that, if for those of you who might be watching, it's 1071, and you might have to be compliant with that as well. And I will say just the amount of time, even the years that it takes internally for an organization to get these things right, and then also follow the evolution of how the Bureau wants this information reported, how they can then go in and look into your organization at any time if you're under their supervision to make sure you're compliant. It's a lift, and it's not that it can't be done. It's just that you must be prepared and know that these resources will always have to be there. And you will have to continue to engage with the Bureau and the regulation.
Yeah, and listening to you, Courtney, it is definitely something you have to manage proactive. You can't just sit back. It is a function, so it's not something that's a one-off and regulation ticking the box. And moreover, it's a specialty. Because if you, I mean, just speaking also before this webinar with Courtney, it goes layers deeper, and it's cross-referencing, so it's really a specialty. So it's not something that is really easy.
Yeah. Okay. Let's move into then kind of what we want to deliver today and talk about, which is how Akoya can help with all of this with 1033 compliance. So over the past 3 months or so throughout these webinars, we've sort of focused on different angles, both the technical, the operational, the policy, etc., and the complexity that comes with standing all of this up, making this all available to consumers, and then keeping it aligned with regulatory requirements as they evolve. So Courtney will talk a little bit about how the solution here not only delivers those technical assets like the exposing of APIs, the developer interface, but also provides the managed services like managing the third-party relationships, security and risk reviews, helping to maintain policies and procedures, and doing all of this as things evolve, keeping an eye on that as open banking experts to really deliver a full service solution. So I'll hand it over to Courtney to dig a little bit more into that and how it touches on all these components.
Yeah, I know we have been talking in a way that sounds very doom and gloom and it's scary, but do not fear, because there are solutions like Akoya, that we have a full service 1033 compliance solution that can be modified to best meet the needs of your institution. Like the poll that was taken at the top of this webinar, look, it's hard to do it all, but you can break it up. You can try to build in-house while also farming out other components of it. No matter what is best for your institution, Akoya is here with a fully compliant solution. So that developer portal, like Olivia was saying, with access to APIs, keeping that documentation that is required by the regulation, all of those things can be white labeled for your financial institutions. That ongoing monitoring of standards, we discussed external standard setting bodies. There are going to be changes to the way that this regulation works and what is required to be compliant. Akoya has the capability to do that and make sure that compliance is continuous, and that we update our standards as those standards evolve or if they change, so that your institution can remain compliant. And we can fully manage that risk that goes into dealing with third parties. I know Jerome touched on that earlier. That is a very, very big part of this, and I don't want that to go overlooked. As he said, there's a lot of responsibility that is put on the institutions that are furnishing this data on behalf of the customer, while to also keep that information safe, and then make sure that the third parties that are taking possession of that information are not compromising the customer. So Akoya is able to do that risk review, make sure that the recipients, the third-party data recipients that are getting this information, thank you, are meeting high security standards. And that framework is tailored to each institution itself. So again, like more information here on this screen. We follow policies and procedures for making data available. We can have that set up, again, if there are any outside requests from the Consumer Financial Protection Bureau to prove or show that you are compliant or responding to third parties in an appropriate way or keeping consumer data safe. We have that capability. Third-party support, and then also the data access agreements. Like, look, Akoya has been in this game for a while. This is what we are here for. We are trusted by a number of institutions, and some of the largest institutions that have to comply with this regulation, and that is for a reason. That is because we can and do provide all of these things to make sure that you are compliant with 1033. And look, it's not even the compliance component alone, but I think just being able to have the security and knowledge that you are managing these processes in a way that also helps with your overall compliance at your institution, and just generally making things easier, and not under necessarily the threat of not being in compliance, but instead having your services operate in the best way possible. Akoya is able to deliver that. So I'm happy to work here and be able to say that with a smile on my face, and be excited that we actually do all of this and do it very well.
Your smile's making me smile, Courtney. Thank you. And I do encourage, like, we have a few more slides here, but before we get into the Q&A, please feel free, anyone, to put your questions in the chat, so that in the Q&A section, so that we can have them when the time comes to go there. But before we do that, I just want to encourage people, thinking back on the poll when we first started, I think it was about 35% of people were still not sure where their financial institution was going to go on this path, where they were thinking about partnering or outsourcing, or maybe you're already building. But we've put together these two tools, a readiness assessment and a cost calculator, by having countless conversations with financial institutions of all sizes. And really within 5 minutes, it's a pretty comprehensive assessment, but you can get through it relatively quickly. You can kind of gauge where you're at, where your financial institution is at on the readiness scale from low to high. And then you can even go even further to really understand exactly what it would cost on an initial basis and an ongoing basis to run this compliance 1033 compliance program at your institution. So they're all real time. You can dig into them there. You can scan the QR code and then get the results scanned and emailed to yourself. Use them to build a business case, use them to help understand where you're at and have conversations at the financial institution to keep things moving forward. So with that, I think we have about 14 minutes here to jump into the Q&A. So let me go and open this. I think a few people have already put some questions in. Thank you. And keep them coming. If you have more, we'll always answer them afterwards if we can't get to them. But the first question here, Jerome, is for you. In Europe and in the UK, a key driver for open banking was the ability for a third party to initiate a payment on behalf of the consumer. This isn't something that's in scope in the US. How do you see this playing out? And do you think that this is going to be an ongoing issue for the US? Why do you think it isn't a part of the 1033 regulation already?
I think it is what I see in market, right, around the globe, is that the combination of open banking, open finance, and instant payments in the end is solving this problem. All in the other regions as well, it all started with data sharing. There has been a part of payments initiation as part of those regulations as well, but the take-up was first on the account information, right? On the data sharing, not so much on the payments initiation. Very recently, the last 2-3 years, we see that changing. First of all, in markets that are developing and basically bypassing card infrastructure through account-to-account open banking instant payments solutions, but now as well in the more mature markets. So if you look at UK, for example, where the tax authority allows now to pay the tax, to pay your taxes through open banking account-to-account with instant payments, you now see the volumes of payment initiation bypassing the volumes of account information. And so the route, I think, for US will be, that's not part of the regulation. I'm sure it will come later on, especially with the uptake of instant payments. These needs will come. And it requires, again, some kind of standardization, how you exchange them payments through this new channel and make it work.
Thanks, Jerome. Courtney, I think this one's for you because you had talked about the various functions that are required to participate in fulfilling 1033 requirements. That's a lot of stakeholders to coordinate. For a successful program, which function should be taking the lead and where should executive sponsorship come from?
I think that's the very interesting question. I think it is contingent upon the size of the institution, but I would say a function within legal in coordination with product, depending on how your organization is structured, would be the best way to approach it. I mean, you have to look and see what processes you already have, what's in place, and what you need to do and build, and that is best evaluated, I would say, between those two functions. But again, this being a new regulation that requires building and compliance of a lot of different things, it would not, in my opinion, be a bad idea to just set up a fully standing group with representatives from all of those parts of the organization that we discussed, like engineering, products, legal, policy, and just go through the readiness assessment and see like what needs to be done. It's a beast, but that would be my recommendation. I know there's a bit of bias too, because I'm a lawyer, to say start with legal, but you can't go wrong there, right?
Jerome, do you have any kind of inclination from your past experiences and anything different than that? Anyone that you believe should take the lead or where the executive sponsorship should come from?
I mean, for a market, I think in the end it is working together, right? Potential representations of third parties, if they are organized, definitely banks are organized. I think Akoya, like a central entity, can play a role here to help out and sort out some of these policies. And and really create a practitioner view on it, because that will be required. You will run into issues going into the implementation in the details, which you want to solve together. And you want to have some kind of alignment with the industry of other practitioners that facing the same and find a common ground. And that's back also to the question on the payments one. Yeah, it will come, right? That the payments API will come. The same is for all the things which are here for 1033. What I said about third parties being authorized, right? In the end, you want to, I see one of the questions is popping in here in I would say, can one, if one party is authorized with one bank, can it become automatically available for the other? I mean, not yet, but I think that is definitely a practitioner's view which you want to get into to make that a scalable and operational viable solution in the end.
Yeah, I was going to just ask you that one, and then I know you had already touched on it, so you brought it back in. Thank you. Let me see. There are quite a few in here, but let me ask this one, and I think actually both of you could likely answer this, but one of Section 1033 rule requirement requires banks to share customer financial information with third parties, such as fintech companies and data aggregators. Since banks have limited control over how third parties use and protect this data, won't it leave customers vulnerable to data breaches and fraud?
I think, that question, I think it gets to the heart of one of the bigger issues that has been discussed, like when people are evaluating the rule or going through it. I mean, it's a valid question. And in the way that it's presented, thank you for the person who asked that question. I agree. You don't know how third parties might do that data, or if they are adhering to standards that are as high as you would have at your financial institution that's proffering that information. But again, that's why it is important to work with an institution like Akoya, if you are partnering on your 1033 compliance, to make sure that you are setting standards or working by them that are not only high enough to make sure that the customer information is protected, but that in the event that there is a third-party request that comes in and they do not, that institution themselves do not seem to adhere to or do not meet the evaluation or standards that you have set up in concert with Akoya to make sure that that data is safe, then you can deny that access. And then on top of that, retain the reasoning for the denial and in order to uphold those high standards of consumer safety. I mean, again, we are living in an era where not a week goes by, it seems like, where there's not something going on with the data breach, where customer information is not exposed. This is a very valid concern. And it's the one time, I think, if in the unfortunate event that information is compromised, that consumers really understand how important this part of everything that happens behind the scenes is. So I agree. Yes, there is a vulnerability there, but that is why it is so important to make sure that you have set up the standards and procedures, or are working with an institution like Akoya that can help vet those standards to make sure that that information is safe.
Yeah, so in the end, it will be part of the due diligence, right? One of the questions you will have to ask about what is that third party doing with that data? How can they protect it in the end? And remember, right? Most open banking and regulating I would say the way you open banking is also coming from the practice which is today, which is screen scraping, which is even worse. So I think it's a step in the right direction. So it's already better than what it now is, but it has to be, I would say, there has to be some stringent way of assessing those third parties, so they are applying to the rules of the game, and you can be sure that whatever you share, there's no data breach in the end.
No, right, Jerome, I forgot. I don't know how screen scraping fell out of my head. I guess I just blocked it. It's terrible.
You're already on the next level, You're already in the future, right? So you're looking.
I've moved to the future. We do not want screen scraping. So again, as Jerome said, at least we are moving in the right direction with the regulation. But you have to be able to show that they've met those standards. Yes.
Yeah, I feel like all we talk about is screen scraping. Courtney, this question is for you. Can you expand on what Akoya can do to help with the ongoing management of third parties? How exactly do you plan to meet evolving obligations, whether they're technical requirements or regulatory changes as things evolve?
And again, well, Akoya is in touch with, or is very connected to the standard setting organizations that the CFPB is working with, though the CFPB has not yet designated a standard setting organization externally. We do work with FDX and make sure that those required elements for compliance are there, and we're part of that process. We are members, and we have influence there. And I would also say, on top of that, internally, I mean, this is what Akoya was built for. Like, Akoya exists because that consumer safety and ability to work and evolve with standards is paramount. So we internally make sure that we are following and reviewing any updates. We proactively communicate that information with our customers, and we work very closely with our customers or anybody who's working with us to make sure that not only we are compliant, but you are aware of any evolving standards and can meet them. So I think that the managed services part of the work that we discussed, and that high touch portion, like, that's where our strengths come through in being able to stay updated with that continual evolving regulatory space that we know is going to be there.
Sharon, I couldn't tell if you were about to say something, but if not, I have one more question.
Go ahead.
This is one I've heard asked a couple of times, but I'd love to hear the answer. Section 1033 is supposed to level the playing field between large and small financial institutions. Yet these smaller institutions aren't required to comply for years. Like, this goes up to 2030. Do you see smaller financial institutions beginning to move on the business opportunities of Section 1033, or are they waiting?
That for either one of us. I have thoughts. I know, like, when it comes to any sort of compliance issues with a financial institution, like, look, things will be put off until they are absolutely 100% necessary, because it's just a matter of resourcing and what people can do. However, smaller institutions, even ones that have to comply later or have been completely exempted, are still working to set up compliance in this new era that we're going into, because it's not just a matter of being compliant for the sake of being or doing it for the sake of being compliant, but also being competitive. Like, this is a way to get information about your customers, to do work in service of your customers. So yes, it's further out, but it's still, at least from what I have seen in talking to these institutions and also working with them, there's still a desire to be able to plug into this so that they don't fall behind generally. Again, this is about modernizing and consumer access, and that's universal, irrespective of the institution size. So that's
let me throw in a different angle, because I think the institutions that are regulated on this one, they will focus, to Courtney's point, on becoming compliant. So all the energy will be going into becoming compliant. So they will be underwater the coming 1.5 years. Good news for the smaller financial institution, they don't have that burden yet. So I would say focus on the value you can get from it.
right.
Let the regulated ones sort out all these complexities we discussed, amongst others, in this webinar. If you have sorted out how you can make in the end the business out of it, yeah, then you pick up on the compliance part from the ones that have created it, and you can immediately go to business. Maybe it's a bit opportunistic, maybe it's a bit wishful thinking, but I at least have seen large banks being sucked into the compliance completely. And then only after, when you have come through that hurdle, start thinking about how to make money out of it, just because it's sucking up all the oxygen out of the discussion. That is what potentially the smaller institutions can benefit from.
Okay. Jerome, you went like straight for the jugular of the nice way I was trying to say. But that's what we need. He's right. He's right.
Thank you both. We're right at time. We're at 1:45. So with that, if anyone would like to learn more, please visit us at akoya.com/1033. From there, you can request a 30-minute custom demo for your financial institution. You can access overview materials, and you can get back to that readiness assessment and cost calculator. We'd love to hear from you, so check us out there. I'd like to thank Courtney and Jerome. Thank you so much for being here with us today. Jerome, no one knew, but he's in Singapore and I think it's 3 a.m. So we appreciate you being here with us and being so cheery. And for everyone else, when this wraps, there'll just be a 10-second survey. We'd love if you could fill that out. Let us know your thoughts and let us know if you're interested in the demo. We can follow up directly from there. So thanks again for joining us, and we'll see you soon.